Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, coming back to you on July 4th with Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. Good to see you. Happy 4th.
Happy 4th. Thank you very much. Yes, 246 years young. I would not want to blow out those candles. That would take me a couple of breaths, I'm thinking. Hey, so what I want to talk about here is a topic that I see lumped together. And in my mind, they are very different. They're not even connected. And that is what is called iBuyers and what people call Wall Street. So when I say those two terms, do you see them as separate, or do we need to add delineation before we go deeper?
Well, yeah, I mean, so some of the iBuyers are public companies, so some people will think of them as Wall Street, but, when you say Wall Street buyers, to me, that means companies that are buying for rent product.
Correct.
Like whichever one it is. I think it's Blackstone, not BlackRock.
Yeah, it's Blackstone, right? BlackRock came out with a public announcement saying, we're not buying single family homes. Stop quoting our name.
Yeah, it's been Blackstone since the 2008 and 9. They're the ones that came in and bought up all the toxic assets, and then they just realized, wait a minute, we can hang on to these things. And so you have companies like that are raising capital to buy houses to rent. That's their business model. Then you have the iBuyers. Some of them might be public companies, but what they do is they just buy from homeowners to resell. So they're not keeping them, renting them. They're buying. It's just a washboard. They're just buying and reselling. Typically, is what they do. Now, some of them have unloaded their portfolios to the Wall Street investment for rent buyers because they couldn't get rid of them, with what's happening in the market. You'll probably see more and more of that. A couple of them are going out of business, shutting down because the market's changing. Zillow tried to enter that market because Zillow wants to be the one-stop shop for real estate. They want to do, replace everything that you need outside of them for a real estate transaction. So they started trying the iBuy program, and it was very unprofitable. They ended up shutting that down and sold off all their inventory as well. So that's the difference. One buys and sells. It's a mechanism, for buying and selling, transactional. The other one is a buy and hold, for rent.
Yeah, and that's exactly how I see it, because I see a lot of people just throwing around the world Wall Street iBuyers. Like somebody's going to say Wall Street's going to go out of business with this model, and I laugh. That's not how this is going to play out, right?
It depends on how they're structured. So, Wall Street's in it for the long term. So they're looking at two things. One, they're looking at, placing capital. I need somewhere to put my capital. Housing's always, historically been the best hedge against inflation that you can be in. It's always been one of the safest investments and the best stores of wealth of any asset because it generally doesn't lose value, as quickly and as deeply as other assets do. Although 2008-9 was a pretty big hit. So that's the reason, that's one reason. The other is, the cash flow. So you're getting, yield and cash flow. And then of course the appreciation that goes on down the road. Now, some of these firms, have highly levered these transactions, and some of them on short-term bridge debt that's going to adjust. So, and reset. So there might be some that have to sell, but, they'll just sell to another bigger firm, so them going out of business and, going bust and that creating a big, flood of houses in the market. Again, they're less than 1% of the owners anyways, of the entire stock out there, and other entities will buy them up before those houses ever hit the market, so that's not going to be a wave of bankruptcies creating some sort of a housing bubble or crash or whatever.
Yeah. When I think of Wall Street, right, again, it's purpose-built cash flow, levered play, now buying new versus old. That's a very big change from when Blackstone was doing this originally. They were buying all the junk before. Now they're buying new direct from builders. And again, I think one of the things that the reason I believe, again, median price is not going to take a hit like a lot of people think is when Wall Street gets a hold of a rental, I believe Wall Street, it'll always stay a rental, or at least most of the time, well over 90%. It'll always, because again, like you said, they're going to put together a portfolio. They're going to have 187 homes in Atlanta, 212 in Austin, or whatever it is. And if they want to get out of Austin for whatever reason, I'm just making this up, they will just sell to some other firm that wants to grow in Austin. They're not going to list these on the MLS. They're not going to list them one at a time. I don't see Wall Street doing that. The reverse.
Yeah, unless they have to. I mean, the only reason they would do that is if they couldn't sell it otherwise and they have to. And, and the reason they're buying new is because there are no bulk purchases of old stock anymore. What they started with, again, where they were buying the notes, they were buying the mortgages, in bulk, hundreds of billions of dollars worth of bad loans that they were buying from the banks. Then, instead of selling those, they just turned a lot of them into rentals. And, to your point, in terms of, their long-term business plan, the money that's being used. So, they are getting their money from pension funds, life companies, companies like that need to earn yield. And the biggest problem they have is continuing to place capital. So the last thing they want to do is exit a vehicle because their investors are going to be like, well, I want to reinvest. That's a huge problem. It's like Warren Buffett used to say, hey, I'd buy enough houses if I could figure out a way to do it. I'd buy all the houses I could if I could figure out an efficient way to do it. Well, Wall Street's figured it out. I don't know if he ever, placed any money there or not, but that's the biggest problem is placing capital, keeping it going, keeping it growing. So with housing, instead of mortgages that end in, 30 years or whatever it is, or get paid off, they're saying, well, let's just own the asset. And then we own it forever. We don't have to worry about a mortgage expiring, terming out, getting paid off, whatever. We continue to bring in that income. So there's more incentive for, those bigger owners to continue to own long-term than there is to sell and exit, rebalance, any kind of a portfolio, unless something changes demographically. And that's why they target certain markets. And again, the only efficient way they can do it now is to have them built new by home builders. And, that model keeps switching. I mean, if I were a, national home builder right now, that's who I'd build for. I'd just go build, as big a community as I could build and sell them to these guys.
Exactly.
Or raise the money myself and just keep doing it myself, but
no, that again, this is one of the things that I think why builders are, as you've brought to my channel months ago now, builders are going to slash and burn first. They have a set of inventory or communities that they're in that they have to finish. But the next set of plans, I think, will be very different, whether it's iBuyers or smaller or whatever. Builders are far more profitable, more nimble. There will be a time, which is happening right now, to slash and burn, because, again, they're kind of committed to the communities they're in. But, again, I don't think this is a long-term pain. I think builders will be much better off. But let's go back to iBuyers. Again, I think most of them are going to go bankrupt probably in the next couple of years. iBuyers, essentially business model was one at a time. I'm going to interact with an inefficient market, real estate. I'm going to use my web presence and marketing to attract sellers. And then I'm either going to clean up and resell, again, one at a time, or fix up and flip one at a time. And that is a model that Zillow proved was hard to do in a rising market. Zillow lost $600 billion in the best market I have ever seen to flip. You go into a flat or down market, all these iBuyers go poof, bust. It's not a business model that is long for this term. They're relying on data models that are clearly inaccurate. They don't know how to negotiate. Again, Zillow lost $600 billion, Greg, in the best market ever to flip. That's hard to do.
Yeah, well, their model was to pay whatever somebody was asking, and they just figured with prices were just going to keep going up, and they overpaid on, underestimated what it would cost and how long and the cost of holding. That's the biggest mistake a lot of flippers make, is they don't factor in the cost of holding while they're waiting to sell, because things have been selling so fast. And when that market changes, that goes up exponentially in the time of year, the location, all these things, play in. But yeah, I mean, you'll see them go away. They'll become obsolete. And we see that a lot, right? They're fintech, emerging tech. And, we see things run full cycle and they become obsolete. So I think Open Door, I don't know if they've shut down their program and have completely switched or not, but there's, 2 or 3 of them out there that are still trying to survive. But yeah, I don't see longevity in that market where we're at right now. There's just too many other people out there looking for houses, and you've got no inventory, and, you don't have enough people that can sell at the right price where that model makes sense.
Yeah. Yeah. So again, I don't think Wall Street goes bust. If Wall Street had to sell, it will be a business decision about moving cities. I think when Wall Street owns it as a rental, certainly if it's new inventory, it will be a rental for a long time. However, iBuyers, you want to talk about something going poof in the next 18 months? I don't think there's any question that more iBuyers will cease to exist, because if they can't make it work in a hot market, what makes you think they can make it work in a down market? It's just, it hurts my head. So yeah. Greg, where can people find you?
Yep. GregDickerson.com. That's where all my info is. Go check it out.
Thank you very much.